Hey, oh my gosh, music stop, no talking. Okay. I don't know what you heard last. All right, but thank you anyway. All right, so I'm gonna just reiterate what I said here for the last minute or so. Welcome everybody, and I was just saying here, I played the Buffalo Bills song there, and obviously it must have worked because now they are leading the Philadelphia Eagles 34-31 in overtime, about 3.5 minutes to go. So a couple of things I just wanted to mention real quick. Number one is I get very excited about what we talk about and what we do here. So sometimes I do speak a little bit too fast. And if you find that is the case, please just tell me to slow down and I will reiterate what I'm saying here. Different words or slower or something. That's not the point here to speak fast here. Just want to make sure that I guess there's so much stuff to tell you. I want to get it in fast. Thank you very much, Joan, for your comments. Nice to see you here. I love this, what she wrote in here. My goodness. She's so excited about DayTradeSPY. She says, I played around with options, but almost no success. I know that's about to change with your system. I sure hope so, Joan, and everybody else who's into SPY for the first time. All right, don't worry about the typos. That's not a problem. Where can I get the book? 6-month 1% blueprint. Charles, I think if you just email customer service at DayTradeSPY and ask for that, they should be able to get you that. I have to get it too. I haven't seen it yet. Okay. Let me see. Okay. All right, Jack, subscribe to DayTradeSPY on 11/22. Have not been able to sign to subscription site and get the free daily paycheck system. Want to be able to trade tomorrow. Help. Let me just get that information down there, and I will actually send that down to customer service as well. Bear with me, folks. What we're doing here, believe it or not, we are actually killing a little bit of time here just to make sure everybody's online. I do have a lot of people still joining us right now. And okay, no sound. Does it start yet? Sounds okay now. Good stuff. Streaming is going now. Okay, streaming should be going as far as I know. Let me just take a look at that. Well, actually, I can't really see that. Okay, I'm assuming it is going. Marianne, thank you so much. I love your method. What's this? Eagles won in overtime. Whoa, hang on. What? Let me take a look here. Is that over? Somebody saying the Eagles won in overtime. What? Oh man. Yeah, well, that's par for the course. Sorry, I think there's still 2.5 minutes to go, is there not? Anyway, I know that's not why you are here. All right, didn't go well. Okay, Bruce is saying, looking forward to it. Okay, one question: what happened on Friday's pick of the day? All right, we'll go over that a little later on. And all right, we'll get back some more questions a little bit later on here too. Okay. All right. Okay. All right, the final, yes, Philadelphia Eagles 37, Buffalo Bills 34. So sorry to hear that. Anyway, well. Life in the fast lane. Let's get started, ladies and gentlemen. Let's get started. And good evening again. Welcome to DayTradeSPY.com's Week Ahead. My name is Hugh. Co-host is Aaron, but I think he's got the night off today. We gave him the night off. So, all right, gang, by attending this webinar, you fully understand and accept the financial risks involved in trading securities. Risk of loss game is substantial. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. By accessing this webinar, you understand that you're not receiving any advice as to what or when to buy or sell, but are simply receiving information for educational purposes only. Any decisions concerning your trade are solely your own to meet your personal objectives and risk tolerances. You're alone responsible for all your own trading, and past performance does not guarantee future results. Any charts perhaps that we show is courtesy of TD Ameritrade Thinkorswim and also Tasty Trade. They call it Tasty Trade now. All right, there I am in real life color. Let's get moving here on the PowerPoint, and I think I have it up here somewhere. All right, so I've got a couple of questions I want to ask, but first I want you to meet your host. That's me, and the stuff that I learned from trading, I picked it up from the trenches, mired deep in the mud. That's what I've been doing now for many years, and yeah, I've had some formal training along the way. I suppose I took all these courses in different things, so, and I'll tell you a little bit about that as a background. But well, I'll tell you now, for those of you who don't know, I come from a corporate America background, and like a good salaried employee, I used to be an internal auditor. Like a good salaried employee, I would hand off a lot of my money to my financial advisor to invest in my retirement. Didn't go too well. As a matter of fact, he blew out about half my account. That's when I realized I have to take things under, I have to seize control and take control of my situation myself. And I'll never forget, I remember learning a couple of things that day when I drove home. And first of all, I realized that nobody cares or should care more about my money than me. And that goes for each and every one of you. All right. You can hand off your money to your financial advisor and, to your friend or whatever, and they'll do the best they can. I'm sure they have the best intentions in mind, but at the end of the day, you are nothing more than a pigeon for them, right? They're using your money to obviously further their own careers. And it's almost a sin, I think, but you should understand that you should care the most about your money, more than anybody. The other thing is, now with the power of the internet, we literally have all the information at our fingertips just as much as anybody else. Therefore, just a matter of making some wise decisions along the way and, controlling your own account and actually actively controlling your account. So some real eye openers when that happened. At least it was to me. So didn't come easily. I started taking a lot of courses, various things online, and went to different seminars, webinars. Chances are, if there's a course out there, I took it. Excuse me while I have the occasional drink of water here. But I took a lot of courses along the way and learned a lot of stuff. I'm not going to kid you. I learned a lot of stuff, mostly what not to do. Mostly that a lot of these other companies were just simply looking to upsell you all the time. And anyway, it was not to slam, and they're doing the best they can, I'm sure. And that's what it's all about. But you don't have to. What I learned, I think, the most, and I learned a lot of stuff. We're going to talk about this stuff later. But what I think I learned the most was you don't have to know everything about the stock market, and you don't have to have a program that searches out many thousands of stocks and sectors and exchange traded funds and this and that and everything else. At first, I thought that's a good thing, right? I need to, oh my gosh, I need to know all this stuff. I need to know so many different things. And then, you feel so empowered that, oh my gosh, I've got the whole stock market right here, before me, and I can trade anything I want. And I now have a margin account, and well, the whole world, here we go. Look out, world, right? But didn't work out all that well for me. More confusing than anything else. And you go down one path and you find another one and another one. Remember that little toy? I don't know if they still have it now. It's like a little car or something. You put in a box and it would go along, and then it'll hit the side of the box, roll over on its back, and go a different direction until it hits the next obstacle. Then it turns around and goes back, finds another obstacle. That's kind of the way it was with me. Started with equities. I took a look at futures, Forex, various things, commodities, different things, options on different things, companies, ETFs, whatever, day trade, swing trade, position trade. I took a look at all these different spreads. Oh my gosh, spreads, straddles, strangles, married puts, covered calls, you name it. Butterflies, broken wing this. Then I stopped. I said, okay, all right. So first of all, I asked myself, who do I know is actually making a lot of money with these various systems out there? That's the guy I got to try and find. And you know what? I couldn't really find them. I think there were some people out there, but I just couldn't find them. Then I thought, well, how hard should this actually be? Like, I think I'm kind of a simple guy. I don't want to complicate things. I know I'm getting off the beaten path here, but this is what the Sunday night chats are all about. I realize that the market goes up and it goes down. How prophetic, right? There's no other way. It only goes up and it goes down. And it goes up and down many times during the day. So all I have to do is find a direction, pick a direction, buy it, and then sell it for a little more. And by trading options, I have huge leverage. I don't need it to go up very fast, very far, just need to go up a little bit. If I buy some time, I'm buying that insurance so that I'm not killed on this data loss. Anyway, all this wonderful stuff, I came to the realization that if I can keep it as simple as possible, then things go pretty good. And it's just a matter of trying to find that direction and the propensity of where it's going to go, and then you'll probably be okay. So I like simple. It's so funny because last night I was over at my brother's house, John's place, and we were talking about how complicated everything is today. And I'm sure some of you can relate. For example, my car, my very expensive car, fine German-built car, we're talking about how one time your car radio had two buttons, on, off, and volume, and then a tuning. And in between the two buttons, there were five little knobs. There were five little buttons that preset stations. And you found something you like, you hit the button, you crank it up, you're happy. Now it doesn't work that way. Oh, no. No, I don't know what you need a degree in, but I guess you have to go find some 14-year-old kid to tell you how to work the stupid car radio, right? I mean, you push it, as I was telling you, push the button, and you say things like, okay, satellite, let's go, Motown 70s or whatever. And then my car returns with the response, air conditioner set to 68 degrees. Why does it do that? Why can't it just say, find it yourself, dummy? Or anyway, oh, how I miss my father's 66 Chevy Impala. Anyway, so I discovered a few things as to how they worked well for me, trading SPY options, because with SPY, you can make money both going up and down. What a beautiful thing. What a concept. And then I started making some serious money. And then when I started making some serious money, people started to take notice. And I bought myself some nice little toys, new cars, vacations, new house, new airplane. And people start saying, okay, Hugh, what are you doing? You won a lottery? How about if I give you the numbers and you just pick them for me? No, I'm just trading SPY. And well, can you show me? And hence, DayTradeSPY started back in 2010. So that was my story. Now, Aaron, on the other hand, here's a guy, and he's a little more technically savvy than I am. As a matter of fact, he got into this deep dive technical analysis back when he was in his teens. He opened up his first trading account when he was 18 years old, and all his friends were chasing girls and playing sports and climbing trees. He was trading, at least paper trading on stocks or something, doing technical analysis on charts. When all his friends were in class, he'd sneak out to the library in school and pull out the Wall Street Journal and he'd study charts. Self-described nerd. Great guy. But we actually scooped him up from a $150 million commodity fund. And we've got him on board. Every morning in our trading room, there he is. And we analyze charts. He analyzes charts. I analyze charts. He analyzes longer term high probability trades. And when we match up our analysis, it's actually uncanny. We have a saying that goes something like this: when our indicators unite, our trades ignite. And it can't be any truer. Anyway, that's our story. Folks, we're heading into the month end here. We're going to be discussing the 2 to 10K challenge. This is our trading room challenge. We're going to talk about your trades, your challenges. We're going to answer your questions. So get your questions ready in the questions box. Hope to get to them all. I'm also going to be talking to you about the DayTradeSPY signal. And it's very exciting stuff that's transpired this last week concerning this new service that we have. All right, but first of all, I want to ask you a couple of questions here. First of all, here it is right here. All right, excuse me. How familiar are you with options? Please put it in the questions box. I want to get an idea as to how familiar you are with options. Not at all. Somewhat, maybe you know what calls and puts there, but that's about it. You know what delta, theta, volatility, a few other things are, then punch up C. And if you are very, very familiar with options, punch up a D. The reason I ask these questions is because I kind of want to know where to go with my presentations here. All right, because I don't want to bore you with very basic, elementary kind of things here. So for that reason, I would rather skip over what are options. Okay, now if you don't know anything about options, okay. All right, Howard, I taught to you before. Okay. All right, most people are very familiar. Basically, an option is a contract that allows you to trade the underlying stock for a certain price by a certain date. Do not get wound up in the terminology. And wow, a lot of, all right, there's a good mix here, good mix, mostly B's and C's. All right, good stuff. Thank you for that. So you can buy an option on the trading platform, just about any trading platform out there. Any respectable trading platform is going to allow you to buy options. And it's just a contract with an options holder that allows you to buy or sell the underlying stock for a certain price by a certain day. All right, my next question here, answers are 1, 2, and 3. Have you been to our webinar before? Punch up a 1 if this is your first time. Yes, if sometimes. 3, yes, I've been here a lot. And I just want to get an idea again how many people have been here before. All right, Tia, thank you so much. I'm starting to learn more. Thanks to you and Aaron. Thank you so much, Tia. All right, a lot of first timers. Oh my gosh. Bruce, Steve, Terry, Anil, I hope I pronounced that right. Good to have you here. A lot of 2s, 3s. Danuta, I hope I pronounced that right. Welcome, Lucienda, Jack L, Greg. Okay, everybody. Oh my gosh, lots of 2s and 3s. Alan, lots of 1s. Jeff, oh my gosh. Just curious where you find out about us. You got people from all over the place here. People from literally around the world. Okay, here, while we're on this vein, tell me where you are. Tell me where you're located. Punch that up in the website. Where are you located, folks? Because I got a feeling that people are calling in from around the world here. So I want to see where you're all located. That's not on my questions box, but just curious. Where is home for you? All right. Okay. Atlanta, PA, Oregon, Pensacola, Florida, USPA, Stuttgart, Germany. Stuttgart. What do they make there? Is that where they make BMWs, Mercedes, Stuttgart? Casa Grande, Arizona. Great. Yeah, you know, we're looking to head over that way in February. We're going to be at the Money Show in Arizona, in Las Vegas. So we're probably going to take a bit of a detour, spend a few extra days, and head over to Arizona, and then tour around there a little bit. Check out the Grand Canyon, Kingsville, Ontario, Canada. Chris, thanks for checking in. Midwest, New Mexico, North Carolina. Mabel, thank you for that. Virginia, Boston, New York, New Jersey, Michigan. We got people from all over the place. Denver, Texas, Atlanta, St. Louis. Okay, Long Island, Alabama, Atlanta, Asheville, North Carolina, Idaho, Dallas. Whoa, wow. Okay, this is so cool. Kitchener, Ontario. Bruce, thank you so much for that. California. Oh, wow. Well, I can see it all night. Kentucky, Louisville, outside of Louisville. I once went there, Louisville, a place called Nifley, Kentucky. Do you ever hear of it? Nifley, I think its population is about 15 or something. Nice people there. Flagstaff, I love it. Mercedes, it is Mercedes. Okay, Stuttgart. Yes. Is that where you can buy a car? Porsche? Yeah, also you can buy a Porsche, drive it around Europe, and they'll ship it over to the US for free? Is that what they have? We're sort of thinking that. Toronto, Diorani, nice to have you on board. Okay. All right. Next question. Oh, I think it's going to be a longer night than normal here. I think I'm going to go probably an hour and 20 minutes or something. Are you currently making any money here trading, folks? Punch this up here. A for no, looking for something better. Yes, sometimes looking for something better. Yes, C, consistently making money. And if you want, punch up a D. What am I doing here? I should have put that in there. D, yes, what am I doing here? Make more money than you ever could. Hugh, that's what you should put there. Okay. Lots of B's, sometimes for something better. Lots of B's. Okay. A, okay. A's, lots of B, mostly B's right now. A's. Cool. Okay. Okay. Making money on paper account. That's good, Marianne. Making money on paper. Okay. I'm okay. I want to make some more money for my granddaughter's college. Don, we were going to work on that. Absolutely. I want to see your granddaughter go to the best college she can and graduate. At the end of the day, this is how you're going to make money. But I think a college degree still is a good thing that says you accomplished something. Okay, lots of A's and B's. All right, let's move on, folks. Let's get on here. All right, so here's the week in review. Here's kind of what happened this last week. I'm going to quickly go through this. Monday, low new news day, new low or no news day. Monday seems to be very much that way now. Not really sure why, but SPY did break a key resistance. Then it just shot up like a rocket. We ran up 4 points by day's end and found some pretty good resistance up at that around the 454.5 level. Settled down a little bit. By Tuesday, we saw some serious profit taking as it came right back down to test the 453, 452.5 level, even lower, 452, bounced off that. There's some existing home sales and Fed meeting minutes that were released in the afternoon. And they just talked about how the Feds are probably going to be sidelining it for a little bit here now and going to see what happens next little while. More or less a promise of no more rate hikes in November, December type of thing. And we'll see what happens next year. That pushed SPY higher, ended up closing about 50 cents higher than it opened after some pretty good volley back and forth there all day Tuesday. On Wednesday, we had lower than expected unemployment claims. Now that pushed SPY higher. That came in at 8:30 in the morning. Then consumer sentiment pulled it back to close slightly over the open. So we had some pretty good bounce on Wednesday. Thursday, of course, the markets were closed for Thanksgiving. By the way, I hope you had a great Thanksgiving. And lighter than normal trading on shorter hours kept SPY range bound to wrap up the week on Friday. That was Friday. So that's kind of what happened there. So let's take a look and see at the end of the day what happened. The S&P rose about a point on during the week, 1 percentage point year to date, almost 19%. NASDAQ is up just over 36%. The Dow's up just under 7% year to date. That's pretty darn good. Historically, markets have done well after Thanksgiving. Over the last 30 years, the average return in December was somewhere around 1%. We're going back over the last 30 years for that. So it's pushing to the upside, right? Also, they say that after a negative third quarter, which is what we had, the fourth quarter is generally quite a bit better. So I think as we head into the end of the year, also with the rebalancing of funds and the Santa rally, I know that's all coming up. So we're going to see what happens there. After a 10% correction in October, November's S&P has been favorable, already up 7%. NASDAQ hit over 9% on that. And ongoing moderation in inflation. CPI reduced to 3.2%. And let me just correct this because I am not one for typos. Here we go. All right, let's try this again. CPI reduced to 3.2% with core inflation down to 4%. Feds are looking to step to the sidelines now, and they said there's unlikely going to be a rate hike in December. Although sometimes they talk about still coming down more, they're still sort of threatening it a little bit every now and then, but it's looking like they're probably going to just sit back and just wait and see what happens. Gradual cooling in the economy now. It used to be sales were down pretty good, but jobless, the employment numbers were still pretty hot. Well, that now is also kind of coming down a little bit. Supportive of the recent rally, lower retail sales, slightly higher job loss claims as well, telling us that the economy is actually cooling a little bit. So that's a good sign for inflation. Seasonally, so for those of you not familiar, this is a seasonal chart. That blue line is where SPY is now, up sitting around about 455.3. And that red line at the bottom is the closing price composite of the last 5 years, daily prices. So we're quite a bit down from there. All right. And here is the way this looks historically over the last 5 years. We dropped about 2 points over the last week, but SPY rose about a point coming up the following week. So it's going to be fairly flat, I think, in this next few days. Looking at the week ahead, Monday, new home sales. On Tuesday, we've got a Richmond Manufacturing Index, Consumer Confidence Report. We've got Fed members, Goolsby speaking, is dovish. Barr is neutral. Waller and Bowman are also going to be speaking. They are hawkish. We'll see what happens on Tuesday. Wednesday, we've got a gross domestic product report, which is going to be somewhat of an inflation indicator, I should say, also oil inventories. Generally speaking, when oil inventories come in less than what they expect, we tend to see markets go up. We'll see what happens this time. Also, OPEC meetings all day Thursday, personal expenditure index, unemployment claims, personal income, personal spending, pending home sales, and the Chicago PMI report. It's going to be a very busy day Thursday. In fact, I'm expecting some pretty wild swings on Thursday. And even on Friday, we've got a Institute for Supply Management Manufacturing PMI report, and Fed Chair Powell speaks. Let me see, what is he going to be speaking on? I think he's going to be part of a panel discussion, if I'm not mistaken, on Friday. Let me see if I can just check that to see just what kind of an influence that is going to have. All right, Friday. He's going to be speaking at 11 o'clock in the morning, due to participate in a fireside chat entitled Navigating Pathways to Economic Mobility at the Spelman College in Atlanta. So probably not going to be speaking too much on monetary policy. He probably will, but his comments carry lots of weight, folks. They carry lots of weight. So we'll see what happens. Here's where I'm thinking here, the bottom line, that volatility could be light on Monday and Tuesday. It'll pick up quite a bit on Wednesday, and Thursday and Friday expect some pretty volatile markets. And what I would do here is aim for lesser gains early in the week, but prepare for more gains, greater gains mid to the end of the week. I think that's probably fairly certain that that's going to happen. So, all right, folks, we have many opportunities every day to make some serious money. I love this lady. She's always looking. She looks so surprised when she looks at us. There she is looking around. We show you how to spot the opportunities and how to trade them. Now, it doesn't always work out that way. I'm going to be very point blank honest with you on that and tell you this is what the 2 to 10K challenge looked like the last few days. Okay. So, yes, I took a bath. Well, maybe a sponge bath on Wednesday, the 22nd of November. Probably should have stayed out of the market. I lost $1,180 here. Let me just expand this here. So for those of you who don't know, okay, so this is what we did here. All right, back in, I think it was April, May, June, July, we started this 2 to 10K challenge where we're taking $2,000, turning it into $10,000 in 3 months. And we actually, I think, came in a week ahead of or something. So it was so popular, people asked for it again. So we started this again, and we started on September the 25th. And we are taking $2,000, turning it into $10,000 and the challenge is to take it to December the 24th or 25th, somewhere in there. Obviously, the 25th, the markets are closed. So we are well on the way to doing that. As a matter of fact, so you have this chart here. I've got the date, of course, trade number, beginning balance, profit target, and our ending target. But then I've got the actual gains, actual balance, and the budget variance from our target. And then, of course, my notes. So things are chugging along pretty good. As a matter of fact, we were almost $2,000 ahead of schedule here. And then what happened on Wednesday, the market just, I was in some 457 calls. I bought in at 265, sold for 222. I didn't like the way the thing was going. The market was going at the time. It came back down, bounced back up, and then it came down again. And I thought, you know what? I'm heading into a holiday. I don't like where this is going. I should probably not even been in the trade, but I am. I'm just going to take the loss. So I took a loss of about $1,180. Still kept us at $619 over budget. Markets were closed for Thanksgiving. Then I got back in again, and again, 456 calls, about 25 contracts. The market went up. Then it kind of came down a little bit. Now, this was actually for next week. But I didn't want to tie up my capital for the weekend. I didn't want to hold into the overnight thing. I thought, you know what, I'm going to take a hit on this one. So that put us $326 behind the 8 ball on this one. We're down. Our actual balance is 56.02, but I'm pretty confident we're going to make up for that, no problem. We're going to make up for that, no problem, because we're doing quite well. Just probably take a couple of days, and we'll make up for that 326, and we'll be back on the path to making our profits. So here's the thing. All right, there's, by the way, the graph of that. So now here's the thing, folks. Most other gurus, or whatever you want to call people like us, I guess, they ignore these. They ignore the losses. What they say is, well, you know what, whatever. Let's move on, right? They don't want to talk about them. But I do want to talk about them because I feel that you learn more from your mistakes than your gains, right? Your wins. I mean, you love to celebrate your wins, obviously. Let's hear it. Let's ring the bell, all the rest of it. But it's those losses that I have actually learned more from. And I think if you go back and you log all your trades and you make notes, and then you go back and you assess, okay, what went wrong here? What went wrong that, an hour ago, I thought this was a good trade, and now I'm looking to cut losses. So here's some lessons I had learned and reinforced. I mean, I kind of know the lessons, but obviously I let my guard down, and look what happened, right? So number one, keep fundamentals in mind. It turned out that I traded against it on the 22nd. I believe the fundamentals were that the unemployment numbers were, I can't remember which they were. I think they were low. They came in under the expected, which is good for the economy, but bad for the stock market. So the stock market shot up. In fact, I should probably bring up the chart on that. It shot up and shot up and shot up. And I guess I felt that FOMO, but I traded against it. I should have kept that back in my mind. I let my emotional wall down, caught up in the euphoria of the market, the climbing market. And I'm going to add in here FOMO, fear of missing out. I thought okay. Let my emotions down. Okay. All right. Caught up in the thing. All right. For of a climb out. Okay, just climb out here. Climb out. Okay, in the market. I'm trying to get this here. Here we go. Okay, let me just, there it is. And I had this overwhelming fear. Okay, I thought it's going to go higher. I just going to get in there. I just got to make like 7 cents or something, which is not going to be hard to do. And when you know it, as soon as I bought it, the market reversed, right? I also failed to confer with Aaron on these longer-term support and resistance levels. So he was actually in the trading room, and Aaron looks into the deeper dive analysis using Fibonacci and Andrew's pitchfork and the various intersections thereof and all the other things that he looks at. So if I had my wits about me at that time, I would have said, Aaron, what do you see? Where's that strong resistance? And then he did talk about it after. He said, well, there was that resistance level, and I wish I had just jumped in and told you about it. So I told him, I said, okay, the next time you see me, talking about this sort of thing, you see that I'm heading down a bad rabbit hole, tell me, just jump right in. You stop. Just say that. You stop. And then go on and tell me what you see. So had I conferred with Aaron on this during the trading room, I probably not would have made those trades, right? So it did come down a little bit. And when I entered, it was actually on a minor support area. That support was not strong enough to hold. As a matter of fact, it bounced around a little bit. I got in, and then it collapsed, came down under that support area. That was a bad point to get in. The seasonals, long-term seasonals, also did not support, right? Did not support an entry to the upside. As a matter of fact, I believe the market was recording as being rather flat for the upcoming few days. I should have probably looked at that a little closer and said, oh, wait a second. This here is probably not a good time to get in. I should probably hold on first. I got complacent also because I was almost $2,000 ahead of the game. And I did feel, I'll admit, I felt anxious and undue pressure trying to, perform heading into the holiday. Okay, let's get this to over $2,000 ahead of ourselves. So I felt this pressure, which I should have no, you don't feel the pressure. That $2,000 or $1,930 or $80 or whatever it was, that's just a number. That doesn't matter. It's just a number. Don't let that pressure you. But I felt that pressure. So the reason I say all this is that if you can learn from my mistakes or our mistakes, you should, right? Smart trader learns from his or her mistakes. A wise trader learns from other people's mistakes, because frankly, you're not going to live long enough to make them all yourself. So you want to make sure that you take these into consideration, and hopefully you've written them down. If not, go back to the recording, write them down. And these are all mistakes that I had made along that way. Now, I should tell you that whenever there's sort of a major setback like that, it is usually not a single thing that happens. Usually it's a multiple number of things that just kind of went wrong. So I can name these 7 things right off the bat that sort of went wrong with me on that one trade, and that is the reason that the market went down and I ended up losing. Right? If there's any one thing, I probably would have been okay. All right. Anybody ever watched that the TV series Mayday? Anybody ever watch Mayday on? I think it's on. I'm not sure if it's on Roku or somewhere on YouTube or Netflix or somewhere I see it. They talk about, so what it is, it's a series. They look at airplane crashes and what went wrong. It's actually really interesting, and you'll find that most airplane crashes, if not all of them, there's a series of things that have gone wrong. It's not just any one thing. It's a whole bunch of little things that went wrong, and that's what caused the incident or the accident. Check it out. Actually interesting, and that's kind of the way it is with trading as well. Okay, let me just take a look here. Okay, so all right, so we're gonna chat here. Let's take a look at the chat here. Evening chat. Where is it? There it is. Okay. All right, got it. Okay, I'm gonna go back into the questions box and discuss some things that some of the questions that have come up in the last little while here. And let me go back to the start here real quick. Wow. I would say we have a lot of questions. Real quick, I don't want to get into too many technical things here, but just a quick question. How do you determine how many calls equals $3,300? So it sounds to me like you have $3,300 to trade, Charles. Take the $3,300, divide it by the value of the option. So if the option is, say, $3.30, and divide that by 100, so or rather multiply that. So $3.30 times 100 is $330. So divide how much you can trade, 3,300, by the $330, and you get 10 contracts. Okay, that's how many options you can buy at $3.30 if you have $3,300 to spend. Okay, do you send out occasionally tips, tricks, and traps from the trenches? Occasionally we send it out. Let me see here. Tell you what I'll do. Let me see. Anybody who subscribes to any of our products or services in the next day, you'll get a copy of our tips, tricks, and traps. And just let me know. All right. Make sure you email me. So here's another thing I want to tell you. All right. A lot of companies, this is what I found too, back when I was learning all this stuff. You buy the package, and again, I'm not here to slam anybody else, but this is the reality of it. You buy the program, you take it home, you plug in the DVD, CD, whatever, and it's not quite the way they presented it, or you don't understand it. You call somebody, you can't get through. You talk to somebody who doesn't speak English. You're just confused. It just doesn't work, or you can't configure it the way you want it to. Something's just not. You end up just very frustrated and confused and everything else, and you don't even know who to turn. You're saying, who was that guy that made that presentation? I'd love to talk to him. Where did he go? Well, he's on to the next thing, right? So with us, it's not like that. I'm going to give you my direct email address. It is hughg@daytradespy.com. So hughg@daytradespy.com. You have any issues at all, anything at all, you email me directly. I will take care of it. I'm not saying I can solve your problem, but I will direct it to wherever it needs to go. All right. And if I can solve the problem for you, I will. So with us, with DayTradeSPY and with Eagle Financial Products, you actually have direct people that you are going to be talking to. Okay. I want to make sure that you are aware of that. That actually matters, because when you're sitting there you're dealing with your own financial future. Let's face it, this is not a game, right? This is not, you're not playing an online game where it doesn't matter. Actually, all of this does matter. And you need to have that confidence. You can actually contact and talk to somebody. So I wanted to make sure you're aware of that. So, all right, let me just go real quick here. Okay, here's the no sounds. Yeah, sorry about that. I had myself muted for a while there. All right, I'm going to scroll down here. Love your method. Thank you for that, Marianne. I love the comments. I love the accolades here. Okay, please let me know to just receive some tips, but without the actual system. Not sure what you're referring to on that one, but right, really looking forward to the new signal service I just signed up for. One question: what happened with Friday's pick of the day? It didn't go very well. Okay, so one of the questions I get is, what is the difference between the pick of the day and the new signal service? So let's get into that. First of all, the new day trade signal service. The new day trade signal service. This is a service, okay? It's going to be sent to your email and your cell phone anywhere from 3 to 5 times a week. So this service is actually triggered off of a live indicator, real-time indicators. I can't tell you what these indicators are or how it works, because then I would have to kill you, and I don't want to do that. That's a joke, but it's a proprietary thing. But you're going to be getting this live alert, right? It's a signal. So as soon as you get it, that is when you buy right then and there and immediately put up for sale for a 5% profit target. If during the day it has not sold, you're going to close out the trade at the end of the day. After extensive testing, this program had worked 96% of the time, earning 5%. Now, we tried it with various profit targets, anywhere from 3 up to 10%. We found the 5% to be that magic number that just works extremely well. So even with this 96% success rate, when you close out the trade at the end of the day, when you close out the trade at the end of the day, you're going to take a small loss. But even with that, you come out way ahead, all right, at the end of the term, whatever you're looking at, 6 months, a year, whatever it is. You're going to come out you should come out way ahead, okay? So that brings us to another question about what expirations to use. When we do these trades, they're always going to be at least a few days out on expiration. So you're going to be given the actual option to purchase. There's always going to be time in there so that by the end of the day comes, you're not going to have a zero balance. If you have a 0 days till expiration, that means that the option would expire that day. So these are not going to be 0 days till expiration. Because if it goes to that and it hasn't reached if it's not in the money, you lost all your money. So rest assured, it's never going to be that. All right. What else can I show you? Options are texted and emailed 3 to 5 times a week. Again, buy immediately within 2 minutes of the trigger. Immediately upon purchase, put up for sale for a 5% profit target. And again, if it doesn't sell by the end of the day, sell at market close. All right, that's so make sure you sell at market close. And special price, and I'm going to tell you here, the special price now, Eagle was going to no longer offer this for $14.95. They're going to go the regular price of, I don't know what it was, $3,000-$4,000 or whatever it was. But we had been going back and forth with a lot of people talking about, the program and setting it all up. And we had a lot of one-on-ones all week and last couple of weeks, something else. And I was able to convince the people at Eagle to extend this $14.95 special price for another few days to get everybody on board. Okay. And they're going to, I think they're going to just have a beta test of 60 people or something. I convinced them to go higher on that. I said, let's just do it for a few more days to see where it goes. And they agreed with that. So, but I can't tell you when they're going to remove this special price and put it up to the regular price of I forgot what it is. I don't know, $3,000-4,000 a year or something like that. So I highly encourage you to jump in on this and don't hesitate. In fact, get it right now. You can go to, I think the website is DayTradeSPY.com. Up at the very top. You will find it. Where is it? Right here. Let me just pull it up here. DayTradeSPY.com. Yeah, I still have clout with these guys here. Here it is, right up in here. DayTradeSPY signal. Subscribe now. All right, up at the top of the gray area right there. Okay. You'll find a lot of different programs that we have, but that's actually pretty cool. So that's kind of what I'm encouraging you to do if you want it. Now, compare that to the pick of the day. Now, the pick of the day is an option that Aaron and I sit down and pre-market. We analyze the market. We determine is the propensity to the upside or the downside. We look at support, resistance, chart patterns, fundamentals, news, all these other wonderful things. We look at a number of different streaming services that come in and news items, news feeds, everything else. Try and get that one option that is it going to go up or down? And that's what we deliver to you shortly after 9 o'clock in the morning. That is designed to be anchored in time. All right, it's anchored in time. So what we're saying is that you buy here and then you sell it at some point in the future. So the idea here is to buy it at the market open right away, but in the first couple of minutes of market open, and then simply put up for sale for 6% profit target using a good till cancel order. So first of all, when you buy the pick of the day, and let's say it's a call option. So if you expect the market to go up, you buy a call option. If you expect the market to go down, you buy a put option. Call up, put down. So let's say the market's going to go up. We think it's going to go up. And we think it's going to go fairly well, so you can make some money off on calls. So if at 9:30, first of all, at 9:30, when the opening bell rings, wait a few seconds for the bid-ask spread to tighten up. You want that to be within 2, 3, 4 cents of each other. Now, especially if there is a huge gap from yesterday's close to today, you'll often see a huge gap in the bid-ask spread. So just wait until the price comes in together with the bid-ask spread. Usually takes a few seconds, and then you want to buy. Always use a limit order. Don't use a market order, okay? Use a limit order. Buy it if the market is going your direction. If it's going against you, look at the 1 minute chart and wait until it starts turning around on the 1 minute chart, and then get in. You'll pick it up for a few cents less. Immediately put up for sale for the good till cancel order with the 6% profit target. You may have to wait overnight in the unlikely event, the rare time, and I believe that's what happened on Friday. Did not fill. We're looking here at Monday's expiration, or Monday and Tuesday, to see about what happens with that. But you may have to hold overnight with that one. You're not closing that out at the end of the day. Now, you could if you want, but the goal here is to have that come into a profit target. That too has an excellent success rate of about 96%. So from your end, what you're getting is an option pick with the pick of the day at just after 9 o'clock in the morning versus the signal, which could be at any time during the day, 3 to 5 times a week. And it's usually going to be in the morning. I'm pretty sure it's going to be usually in the morning. I don't think it's going to happen too much in the afternoon. So that's kind of the difference. Both very good, excellent programs. They work extremely well. So I thought I'd pass that along to you. So the signal is ideal for those not able to or willing to watch the market all day. And the pick is applies for this too. If you don't want to do the research, don't want to do the preparatory analysis. And I can tell you there's a lot of work that goes into this. It's not just, I think I'll just pick one out of the air and go with that. I mean, there's a lot of work that goes into these things. If you're looking for a fairly stable income stream for quick turnaround, same-day results, no overnight holds, and if you're satisfied with sort of a 5% return on investment, which essentially doubles your money every month, right? That's not so bad. I mean, I can put you onto some CDs. I think that might pay 5% a year if you invest $500,000 and you don't touch it. You don't want to go there, folks. With the signal, let us do the heavy lifting. We do the analysis, the market analysis for you. We deliver our option of interest. All you have to do is trade it. Subscribe right now for this limited time offer, $14.95, and just sit back, enjoy the profits. Doesn't get any easier than that. It just doesn't. All right, let's get back to some more questions. More questions. That's why we are here. All right. Okay. All right. Oh, wow. We're looking forward to the new signal service. Just signed up for let me get that question here. There it goes. There you go. Just signed up for the signal service. One question. What happened with Friday's pick of the day? Okay, this pick of the day, I believe that's going to go into tomorrow. We'll see what happens tomorrow. Now, pick of the day, we might actually even repair. We don't repair the signal. So here's another difference. The signal is not to be repaired. It's just simply buy it, sell it, close it off at the end of the day. Whereas the pick of the day, we might end up repairing that one. So that's a whole different thing. By the way, if you want to know how to repair a trade, we've got a really good module on repairing a trade, repairing trades. You'll find that available up in the website as well, up in the top. I should pull that up here. Let me just see if I can find that. Where did it go? DayTradeSPY. Okay, let me show you where that is. Go to the website, and that'd be under online workshops, repairing trades, an excellent workshop right here. Here it is, repairing trades, bad trades workshop. $249 gets you that. Okay, there's other workshops in here as well. So, but get that repair. I think everybody should know how to repair a trade gone bad. I think that's really important. Okay, I think repairing trades is really important. All right, the next question. Next question here. I'm reading the Trading Between the Ears ebook. It refers to your bread and butter ebook. 3 solid entry strategies. Are those still available? Brian, those ebooks are still available. Email us, and I will endeavor to get those ebooks to you. I don't know what the cost is. It seems to me it's $149 each. Excellent ebooks, all of them. A lot of those might be a little dated, a couple of years old, but they're still very valid. Only the dates and the amounts change, but the concepts are all the same. They always have been since the beginning of time. All right, I've been doing it, trading on TradeStation, making a lot of money, but only on paper money. Whole different story live. So that's an interesting comment. So if you're paper trading, it's a whole different story live. So here's the big difference. And sometimes I even wonder whether paper trading is a real thing or not. You know what I'm saying? Because when you're paper trading, you're actually using pretend money. It doesn't matter. You hit the reset button and there's no real money involved. As soon as you put real money into it, whole different ball of wax. Nothing changes on the platform or the market. Everything is the same there. You know what's changed? Your emotions, your response to it. Because right now you're actually watching your very equity floating up and down, all right? Like leaves in the wind, right? You grab a handful of leaves off the ground and you're trying to determine, okay, well, I want these leaves to fall east of me. Why? Because the wind is coming from the west, and I'm pretty confident if I throw this handful of leaves up in the air, if this wind from the west continues, they will fall to the east of me and I will make money. But of course, when you throw it up and the wind shifts to the south and now it's going north, and now you're thinking, oh my gosh, I have a limited time which these leaves have to turn around and go to the east of me or I lose money. And it's a kind of a funny analogy, I know, but look, when real trading, your emotions kick in. Your emotions kick in, and you've got your feelings of fear, right? You don't want to lose your money, so you tend to cut losses short. You don't weather the storms. So many times the market will go down, and even with options, you can lose 10, 20, 30, 40, 50% even. And then you see what? You get feared out, scared out. Is that even a word, feared? You get scared out and you sell. But you continue watching. This is ever happening. You continue watching the market like it's still yours. Well, and then you say to yourself, look at this. Had I waited 10 minutes, 20 minutes, it reversed, it went back up. Had I waited a half hour, I'd be making money. What was I thinking? So here's how your emotions change. It's a very fluid kind of a thing with using real money. Other times the greed kicks in, right? You buy an option, it's going your direction, it's going up, 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 up. Oh my gosh. You keep moving your stop higher, right? You keep moving your stop higher. And then what happens? At some point, It hits resistance and comes back down again. Now you're moving your stop back down, chasing it. Right? You're chasing it. Now you're under the high, you're chasing it down, down, down. And you're thinking to yourself, I can't believe it. Now I'm under what I bought it for. Let me see. I was up 20%. Now I'm actually down 10%. How the heck did that happen? How could I be so stupid? Why wasn't I happy with making 10, 15, 20%? Now I'm hoping and praying that it goes back up. It goes down 30, 40%. Now you're sitting there saying praying, oh my gosh, dear God, please bring it back up. I promise I'm going to sell it when it hits a profit or even break even. And I promise I'll go back to church Sunday. You ever say that? Right? Okay. Sorry, I'm just getting off on a little tangent. But your emotions are in play with real money, whereas they really weren't so much in play money, right? When it's play money, you're just kind of very detached from the trade. You're able to, pull back, and you're able to in a very logical, very sober state, you're able to watch the markets and make some wise decisions. But when you put your emotions into it, it's a whole different thing. And then, of course, there's fear of missing out, right? Oh my gosh, the trade's getting away from me. Everybody's at a party and I'm not there. I want to go to the party. I want to have fun too. So you buy. And then what happened? That's what happened to me the other day. I bought, and then, of course, the market reverses. Now, here we go. Here we go. Fear, greed, ego. I can tell you stories. My goodness. I can tell you a story about this one lady I knew. She was a trader, really good trader. I don't even want to mention her name in case she's out. Great friend of mine. I love her. Love her to pieces. Her boyfriend was a doctor, and he also dabbled in trading, and he actually made some pretty good money in gold. And I remember one morning I saw this lady. We were going somewhere, and she's all mad. And what's mad? What happened to you? And she's talking about how her boyfriend made all this money in gold, and she said, I'm the trader here. What's he doing trading? I don't go into the operating room. What's he doing on the trading floor? He shouldn't be anywhere near this. So out of spite, she went on about I think about $20,000 or $25,000 worth of gold warrants or something. I don't even know what that is. And she ended up losing money on this thing. I said to her, so your ego got in the way and now you lost money. Why weren't you just happy for your boyfriend that he made all this money? Shouldn't you be happy about that? Well, I'm the trader. And so she rather risked and lost money because of her ego. And I'm sure many of us have probably felt that sort of thing too. So, all right. Okay, Eric, I'm going to not make note of your comments here as well. Send this down the line. Hang on a second. Okay, this is going to be a kind of extended session. I love talking to you guys and gals. When I say guys, I mean guys and gals. All right, let's get back here. All right, Johnny L. He's only here for the freebies. No problem, Johnny. No problem. Sooner or later, you will realize that we are the real deal. You'll join us here. All right. Okay. All right. Just to let you know, I was interested in the signal, but still working, not able to place an order in the required 2 minutes much of the time. So a lot of people they carry with their cell phones with them. They have their app on their cell phones where you just so you're ready to go. So as soon as you get the signal on your text message, then right away just jump on your app, make the trade. Nothing to analyze, nothing to look at. Don't look at anything. Make the trade. Get in there the first 2 minutes. Immediately put up for sale for 5%, and then let it and then just let it work out. Right. All right. I'm unsure about the sell side. Buy side is easy. Not really sure what that question comes in at. The sell side. So depending on the platform you're using on that, Lawrence. So I'm not sure what the question is. If you want to buy something, you click on, for example, if you're using TD Ameritrade Thinkorswim, you click on the ask price to sell. You click on the bid side, and your order will sell. Or if you already have your order up on the board, if you go down to that line under the traded where it shows the trade, the order entry section where you have already your purchase. If you right click on that line, you should get a menu, and on that menu should say create opposite order. So click on that and you should have that order up on the board under the order entry as a cell. So I'm hoping that's kind of what you're getting at with that. So all right. Well, your trades for the SPY signal will be primarily at or soon after the opening bell. Paul, I am hoping it's going to be when those indicators set up, and I'm thinking it's probably going to be kind of in the morning when certain key indicators, probably a few minutes after the opening bell, I would say. Don't hold me to it. Depends on when those indicators actually do set up. All right. I call the SOS shiny object syndrome, like the dog from the movie. Okay. All right. What is your stop loss? We don't use stop losses, Marianne. That's not to say we do not manage our trades. All right, so we do not use stop. If you want to lose your money, use a stop. Options vacillate. They breathe. Like, you open up a bottle of fine wine, you have to let it breathe before you drink it. Never understood that. I just open it up, drink it, right? I think the fine, they have the cork, right? Not the ones with the caps. Those aren't fine wines. But so what you do is, our trades are high probability trades. We don't just flip a coin and okay, here's the trade for the day, right? That's not at all. These are high probability trades. So when they are in a losing position, we manage them in different ways. And there's a whole thing on money management in that regard. Essentially, when I look at a trade, I will let it go through its motions, gyrations. I'm looking at enough time so that it should go organically on its own to its profit. If it does go down 50-60%, I will look at it to see why did it go down, what happened, that it dropped so much. If it's a major news item, markets have a short memory for news. It'll probably come back on its own organically. If it drifted down, then I'm worried because now it's drifting down, and I don't like drifts because then it's probably not going to drift up as fast. If the market goes down suddenly, it'll probably find support and go up just as quickly. Okay, you'll find that back in the charts. Take a look at your charts. You'll see that all over the place. 1 minute candles, 5 minute candles. You'll see those 5 minute candles. They might be a whole dollar move in a 5 minute segment, right? In a 5 minute candle. But take a look, you'll see a reversal. Usually you'll see a reversal fairly quickly. If my option is down 50-60%, and if I think that it can go back organically, I'll just sit back and just let it wait. If I think it might need a repair, I'll go and repair the trade. Only as a very last resort will I dump it, as a rule. Now, what I did with the 10K challenge, I did not want to tie up my capital. I just wanted to get out of it because the reasons that I was in that trade no longer applied. So for that reason, I got out of that. So I hope that makes some sense. Anil, you'll get the signal as both a text and an email. Both text and an email. Okay. All right. Okay. Some more questions up on the board. I'm scrolling down to find them after all the ABCs. D's, all those other questions here. Okay. All right. Thank you for those comments. Lots of accolades coming in here. All right. Howard, good talking to you the other day. Thank you very much. I answered your email earlier today. Hope you got that. Bear with me while I scroll down to the very many responses here. And okay, all right. Stuttgart, Germany. I would like to go through there and see the Mercedes factory if I can someday. It's on my bucket list. I don't have a lot of things on my bucket list here, but that's one of them. Okay. All right. Mexico. Wow. Okay. Holy smokes. Hang on a second, ladies and gentlemen. I'm getting to some more questions here. All right. There's a lot of questions coming up here. Okay. Okay, I got that one already. Some of these questions I already answered already here. Okay, I'm just starting to trade real time. Sometimes I do make money. Unfortunately, when I lose a lot more than I gain. Okay, we're gonna have to talk about that and make sure that you gain more than you lose. How do you pick in pre-market direction of SPY? What indicators? Greg, again, there's a lot of proprietary things that go into that. We do look at news feeds. Again, a lot of news feed, and it's very complicated. News feeds, chart patterns, indicators. There's a whole list of them. So, but we're not here to discuss all that and kind of throw all that out there right now. Need better guidance when to get in, when to get out. I'm getting killed. Jan, what do you mean you're getting killed? I will say it has been a challenge the last few days. Okay, it has been a challenge. So we're going to tighten that up a little bit. And what we're going to do is we're going to say, hey, listen, if there's no trade, let's just hold on until there really is a trade. And Steve, you're right too. Recommendation was a put. Okay, so sometimes the pick of the day is going to give you a pick, and I might come in and trade something different. That doesn't mean that the pick is wrong. All right, a trade one direction does not make the other one wrong. They could both be valid trades, and you'll often see that. You'll often see where Aaron and I are going in different directions based on our own indicators. One right does not make the other wrong. It's best when we're both going in the same direction, of course. But sometimes my indicators will, I will see that I think, and we end up both being right at some point. So, great point. Thanks for that, Don. Charles, Friday, don't trade on a short day. There's another good point. Don't trade on a short day, folks. That 4 o'clock bell comes up at 1 o'clock instead of 4 on a Friday, or when it's a short trading day. So, all right. Okay, Paling, if I recall correctly, you actually did confer with Aaron and he agreed with you about the direction of the market. Now, which one are you referring on that, Paling? I did 2 loser trades. I know the one I did not confer, the other I did. Still had a wrong one, and Aaron and I were both pretty upset about that. We're going to see what happens on that one here. Another question here from what you're telling me. If the pick of the day does not look right at the start of the day, please do not send a pick and tell us to pass for the day. Could this be a possibility? Okay, so the pick of the day, we do make sure, or as best as possible, that there's a pick there. But sometimes what happens, the odd time, volatility or something shows up that it's probably best to stay out of the market at that time. It's always better not be in a trade wishing you were than to be in a trade wishing you weren't. So we may just tighten up on that when things are volatile. Volatility is an issue. You want some volatility so you can make some money on days where there's low volatility. I think we had that on Friday and maybe even on Wednesday as well, where the volatility was riding very low. So you didn't have that opportunity to make that money. I think that was kind of important. And I think that could have been a reason, because I remember being in a profit, I think on both of them for a very short period of time or something, but it didn't hit my target. And that's why I ended up not, losing on it. So probably should have looked more at the volatility. And when I saw that it was lower than what my sort of standard is on that, I should have just gone for maybe a 3 or 4 cent gain or a 5 cent gain instead of a higher gain on that one. So, okay, I would not feel upset if you said there's no recommendation at the beginning of the day. We're going to keep that in mind. Thank you for that, Howard. Good suggestion here. Right. Yeah, let's see. What is your setup to enter a trade? We go over that. Okay, Danuta, we go over the setups in detail in the trading room. So I am also going to suggest, if you're not in the trading room, to subscribe to the trading room. This goes for everybody. The trading room, pick it up right here. The trading room, subscribe. I think there's a special. This trading room is unbelievable, folks. I don't want to sit here and flog this like crazy, but for the price, and you have to scroll down. They talk a lot of words. Scroll to the end. This is unbelievable. What they have here is $6.99 for 3 months. All right. Essentially less than a half a Subway sandwich a day to get the tutelage of two professional traders, Aaron and myself. And also, if you are completely, if you're not satisfied, completely satisfied, first 30 days, let them know they'll return every penny of your membership fee. I mean, it doesn't get any better than that. Doesn't get any better than that. But so I highly recommend the trading room. That's where we go over the setups and everything on all our strategies. We got the pick of the day, of course. Well, that's actually a separate subscription service, but we got the OMG, which is out of the morning gate. We have the scalp strategy. We've got different things. All right, let's move along here. Do you trade right after the bell or wait? Depends. I mean, I'm looking for the setup. If the setup is there, I'm going to get it fairly quickly. All right. Okay. Let's see. Sounds like a bad setup for risk of ruin. Seems much better to allocate 25% or 20% to long premium. Two losers in a row can have your stake. So Dan's saying that two losers in a row. So there were some issues with those two trades that I took that were losers. I'm pretty confident we're gonna make that back up. No worries about that. All right, no worries. All right. Tia says, I can vouch for the fact that Hugh does answer his emails and will interact with you by email. Thank you for that, Tia. All right. How does the text look like for the 450 calls? I don't know. I'm not in front of the market right now. Besides, the market's going to change between now and 8:30 tomorrow morning. All right. Do you always buy time? Yes, buy time. Time is insurance, ladies and gentlemen. Time is insurance. Even if you buy a brand new Mercedes-Benz to drive it to your house across the street on a sunny day with no traffic, feeling good, everything is great, you would still, if you were smart, you would still not drive that car off the lot without insurance. Anything can happen, right? You always, you know that. You always buy insurance, and time in this business is insurance. Now, there are times when you might want to buy a 0-day expiration. That's a different strategy, and there's going to be risks and rewards. The rewards can be huge, and so are the risks. All right. Ted, I don't do options. You might want to take a look at options. Ever since getting into options on SPY, I never traded anything else. No more stocks. That's it for me. SPY options, that is the way to go, let me tell you. All right, Phil's asking, is a beta test, will we still get the same price in the future? Let me put it to you this way, Phil. If you get in now, you stand a much better chance of getting grandfathered for all future. I'm not sure. I can't answer that. But I think if you buy for the year at $14.95 or whatever it is, I think you're going to be good for a year, and probably beyond. I can't say on behalf of Eagle Financial Publications, but I'm pretty sure you're going to be good for the year anyway. So, all right. Question from Jack. So when I subscribed, it's a 30-day trial. Now you're saying 14-day trial. What is it? You know what? Go with the 14-day. I don't know. 14-day, you're safe. 14-day, you're safe. Very excited about the new signal program. I believe it's going to working very well for me. You're going to be sending out or putting it on your website with the various things that we should keep in mind for the service. It would be helpful if you have a quick summary for me. Thanks. Well, I think with the signal, there's going to be the rules in the signal. I don't even have I should have a copy of that for you right now. I should have actually brought it up as to what it looks like. But it's going to be a lot like the pick of the day. We're going to have the rules and the underneath the signal. So it should have a pretty good summary there every time that you get that. Okay. All right. If there is no signal on a particular day, is there a text or email notifying us? No. So it's only going to be like a positive signal. So 3 to 5 times a week, you get the signal. If you don't get a signal, there's not going to be anything that says there's no signal. There's just no signal. So, but that's a good question here. All right. Yeah, I don't have, you know what? If you have the pick of the day, the signal is very similar to that. Up at the top, it's going to have the different logo and different colors, more purplish, I think. So, anyway, what percentage of good stop loss? Marianne, you love your stops. You love your stops. I don't have a particular percentage stop loss, because stop losses, you'll find that if you use a stop, your stop will take you out most of the time or much of the time. Think of it this way. As soon as you get into a trade, you are on a losing end, simply because of the bid-ask spread alone, right? If you buy an option for $1 and the bid is 98 cents and the ask is $1, you paid $1 for it. Now you can sell it immediately right now for 98 cents. You're now down 2%. Never mind commissions, right? No commissions yet. No slippage, no anything. So stops generally don't really work well for SPY options. Maybe they work for other things, but I found that when I use stops, I ended up losing more than I gained. So those trades that we give you, those are high probability trades. They're high probability trades. All right, Marco's asking, what's the largest number of contracts you ever traded at one time? Well, there was a time I actually traded hundreds of contracts. I remember years ago, actually, I was trading over $100,000 in single trades. I got filled fairly quickly. It took like maybe a minute or something. And but I don't do that anymore. So paper trading is good for learning how the trading platform works, better than finding out when you're trading live. So here's the thing, if you're using Tasty Trade, unfortunately, they don't have a paper account. So if you are using Tasty Trade, which I really like because of their commission structure, it's $1 a contract to buy, $0 to close a trade. So when I say buy, I mean to open a trade, okay? $1 a contract to open a position, $0 to close a position, up to a maximum of $10. Up to a maximum of $10. So if you're trading 100 contracts, your commission is only $10. If you're trading 1,000 contracts, your commission is $10. I also like the lightning speed executions on Tasty. But the one thing that they don't have is a paper trade account. So if you are going to use Tasty, start with 1 or 2 contracts, okay? Just to be very clear and make sure that you know how that works. So, all right, so let's see. I'm just kind of quickly going through these here. All right, hi Hugh from Gary. If the trades are closed by end of the day, your potential loss on a bad trade could be 20% or more and eat up a lot of the previous 5% profits. Bad day could erase a week or two of gains. And I think people like myself get frustrated while the hard work is gone and I trade harder to make up that loss. How do you deal with larger losses on a smaller $2,000 to $3,000 account? Okay, smaller $2,000 to $3,000 account. Trade small. Okay, so if I have a $2,000 to $3,000 account, I would probably start with trading maybe, and I want to say $700, $800, no more than say $900 on a trade. You don't want to put all your money in any one trade, because no matter what system, there's no system out there that's going to be 100% all the time. It just doesn't exist. And I can prove it to you. If it existed, right, it would be automated, and therefore that automation would be out there, and therefore markets would be so efficient, there would be no volatility. There would be a flat line, right? There'd be no volatility. You make your money on volatility. You make your money on the price going up and down, obviously, right? So I would start maybe trading just a couple of contracts until you slowly build up that account, and then over time, build it up, okay? But our extensive testing showed us that it's rare that the trades close at the end of the day like that. And the worst that we ever had was a 72% loss one time. And then I think the next highest was 35% loss or something like that, 33% or something. Most of the trades were actually much less than that as far as the percentage loss. It's rare that it goes against you that way. So, but that can happen. Yes, it can happen. So you may want to watch that. And if you see the setup and you see, so here's the other thing. All right. So here's how you can actually make more than 5%. We just say use a 5%, and I'm going to let you go soon because I don't want to kind of keep you on that here, but we like to say 5% because you have to have a standard by which to measure success. Now, back in the days when I was learning this, and some of you can vouch to this, if the stock would go up a penny or two, they would say it's a success. Well, sorry, pal, it's not, because I would not have sold it for 1 or 2 cent higher gain, right? You would just not do that. You want to make some money. So we use that 5% as as a standard. Now, if the stock is going in your favor, pull up your 10 and 20 exponential moving averages on your 5-minute chart. This is a great tip I'm telling you right here. So if the price is over the 10 EMA, the 10 is over the EMA on the 5-minute chart, and it's moving up, keep watching that. Keep riding that up until the price comes down to test the 10 EMA. Be careful. If it comes down to the 20 EMA and starts pushing through, get rid of it right away and lock in your 5%. You might find out that you're actually making a lot more than the 5%. So there's a pretty cool tip right there. All right. Can you give a simple example of a day trade and sell order for a 5% gain? Sure. So let's say you buy an option for $3. You multiply the $3 by 1.05 and you'll get $3.15. Put it up for sale right away for $3.15. All right. Eric S., good to have you back here. And Mike agreed to go for 6%. We found that the sweet spot with the signal was the 5%. If the target is not hit, we close it at 3:55 Eastern Standard Time. Harish, yeah, take a look and see what's going on at the end of the day. If it's going totally against you, get rid of it at the end of the day, right? Within the last couple of minutes at the end of the day. That's kind of what we did in our testing here. All right. Will you also be giving us an exact order to put in for a 5% gain? No, because we don't know what you're going to buy it for. See, we give you the signal to buy it, but at the time that we give it to you, that option might be $2. But by the time you buy it, it might be $1.95 or it could be $2.15 or $2.20. It doesn't matter. Because what you're going to do is you're going to buy it and just multiply your buy price by 1.05 and put it up for sale for that price, 1.05. So if you paid $2.10 for it, right? You paid $2.10 for it, multiply by 1.05, you're going to come with $2.20.5. So put up for sale for $2.21. Using a good till cancel, it doesn't matter because it's going to be the end of the day. Just put up for sale for $2.21. Watch it. You should get your 5% and you should be good with it. So, all right. Tom, with the signal program, will a large number of trades on the same issue happening all the time at the same time cause difficulty in getting in and out? Did beta testing evaluate this phenomena? That's not something you would ever have to worry about with SPY. SPY has so much going on for it, so many contracts at once. Unless you are trading $1 million and everybody is trading $1 million or hundreds of thousands at a time at the very same moment, that's a good question. You won't have to worry about that. His question is basically with everybody getting in and buying at the same time, is that going to affect the price? Actually, if anything, hopefully it will to the upside. In other words, if everybody is buying it, think about this. If everybody's buying it, that should increase demand, which would increase the price, right? So hopefully, I would hope that that would happen, but unfortunately, it's probably not going to happen. Like I said, unless you're spending hundreds of thousands of dollars in the trades. All right, how big do they breathe? The options. Well, they could go up and down. I mean, there's a lot of noise on the 1-minute chart. There's a lot of noise on the 1-minute chart, so it could go up and down pretty good. Text or email, it's going to be on both. All right. Okay. Greg is saying I'm getting the emails, but not the texts. Okay. Now that's interesting. You might want to check customer service on the texts. I know that some people who live in Canada may not get the texts. Check on that. I think that's something they'd have to figure out. You should get the text as well on your cell phone. All right. So there's something they might have to do to make sure that you get that. All right. But, make sure they have the right phone number for your cell phone. All right. Okay. Brian Z says, here's a testimonial. I've seen a call and a put both work out in the trading room. Absolutely. And I'm going to kind of, all right. And the trading, Tia is saying the trading room is great. She's in the trading room. She said, that's great. Very helpful for me. Okay. I'm just kind of answering some of these questions, actually reading some of these questions. Confidence is a big thing, folks. Confidence is a big thing here. Jeff is saying, I canceled a couple of limit buys on pick of the day when they didn't close by 10 a.m. Wasn't sure if I could make 6% after 10 a.m. They would have worked out. I'm still learning and gaining confidence. I also didn't trade on the day after Thanksgiving because of the short day and the thin volume. 5 trades, 5 winners. Congratulations on that. All right, Howard, thanks for responding to my comment. Typically, subscribers, the start of the day, given the likelihood of volatility is low, could you please let us know and advise us sell at, let's say, at 3% as opposed to 6%? Probably if the volatility is not up to snuff, we'll probably just issue a no trade today trade, and that's coming. That's something there. So how do you repair a trade? Do you try to repair your 2 losing trades? Did you try to repair? I did not try to. The 10K challenge losing trades, I did not repair those. And okay, so okay, that's 77 and 70, actually 72%. I think it was at 35% loses. That was on the SPY signal. Okay. How many subscribers do you have so far? Sat, we have a lot. I don't know how many, hundreds. Good look on the new service. Thank you very much. If you're not part of it, you should be. These comments keep coming in here, folks. Can you have a buy and sell order at the same time? I think Thinkorswim. Can you put a buy and sell order in at the same time? Well, you want to buy it first and then sell it. And make sure you do that. Do not buy first. Do not sell first and then buy. Make sure, I should tell you this, folks, very important. With options, there are many strategies that you can invoke. And some of these strategies can be absolutely deadly. And I'm talking about, you get in a bad spot, say with naked puts or something, you could be in a very bad spot. You must make sure you trade this way. You buy first and then you sell. Okay, buy first and then you sell. You cannot sell what you don't own, except with options. With options, you can buy, you can sell first and not own it. But you're promising that you're going to buy it back. So if you have money in your trading account, right, you could be obligating your trade balance to something if you make a mistake. If you make a mistake, there's no forgiveness. You can't call your broker and say, oh, I was just kidding about that last trade. Sorry, can you reverse that loss? They'll laugh in your face. Right? Doesn't work that way, pal. Anyway, that's what they're going to say. Make sure you buy first and then you sell. Calls and puts, you always buy first and you sell. All right, you know what? I think I'm gonna have to call this a night here, folks. Been here for an hour and a half here. In order to make 600K in 6 months, I would have to make 109,000 a month or $2,700 a week, right? I don't know what the numbers work out on that, Phil. Making 20, it depends on how you trade, how much you what's the word I'm looking for? You keep reinvesting all your trades and stuff. Look, and I suggest this. Don't keep compounding. So here's what I would suggest. Limit yourself to the number of contracts. Let's say start with 5 contracts or 10 contracts or something. Just keep doing that for a while until you build up your account. Then when you've got a really nice, huge account, then increase your contracts. The number one rule with money management is never trade more than you can afford to lose. There are no guarantees except one guarantee in this business, only one guarantee that I know of, and that is this. You will lose your money. You will lose your money. You will lose your money if you do not know what you are doing with options. That is an ironclad guarantee. You will lose your money if you do not know what you are doing with options. That is not something that you want to play with. Okay. All right. Can you put a stop order and a limit order on the same order? Yes, you can. You can have stop limits. All right. If I subscribe to a program, can I change it to another? I believe so. Yes, just call customer support. They should take care of you in that regard. Can I try out your programs first before committing? You do have to commit, but you can always cancel and get a refund if you want. Okay. It's not a trial. You don't get online and then and then you pay. You get online, pay first, show that you're committed to this, and if you really don't like it, then call back later and cancel if you want. Right? I don't know if too many people who do that though. Most people really enjoy what they're doing here. So, all right. I use Fidelity. How fast do they confirm that your order has filled? I'm not familiar with Fidelity, but I have to guess that probably if Fidelity is like any other trading platform, you should get the order filled right away, and they should tell you right away. With that, folks, I'm going to call it a day. Thank you all. The questions keep coming in, but we're getting running out of time. We already kept it for an hour and a half. So been a real pleasure. The recording's going to be available soon after this, if not tomorrow morning. Have a good one, folks. Take care.